Why you need to wait for the stops to get hit. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. Tuesday. Hopefully everybody started the week off on a good note. So today we're going to talk about why it's so important for stops to get hit. We're going to review the 12 candle rule. We're going to talk about some psychology behind the stop hunt, whether that's a trend trade or whether it's a stop hunt reversal, and why it's important. We're going to go through some examples to step back and realize what's happening each session with boxing traders in, consolidating the market, and then in that initial hour or second hour of that 12 candle window, at some point there will be a stop hunt, either into the trend, into a counter trend to the real move that the market wants to head, or at the high or the low for the reversal. And sometimes you'll get that at the higher low into the counter trend. So again, though, understanding the importance of letting the market show you their hand first and the importance of the stop hunt itself. We're going to go over some simple things today, but why it's so important for stops to get hit if we're not already in the market, and why if you are in a trade, how you can look for signs of that reversal even if they don't hit your profit target. So we're going to talk about that. Hopefully everybody's trading's been improving. I've received a ton of emails. Again, I apologize, and I appreciate all the comments and feedback, and I appreciate people hitting the like button. Really dedicated to every day sharpening my own skills. I talk about this in the 7-step daily routine for high performance traders. I push myself every day. I learn something new every single day. I've learned a ton of stuff from a lot of different people over the years, and it's taken a lot of hard work to develop those skills. And even when you develop those skills, it's a daily battle about trying to improve and also not do things that are so easy to do in live time, because we're susceptible to making little mistakes, emotional, impulsive, irrational decisions. But when you have a process and you simplify things and you keep sharpening your edge and creating solutions to the problems that you're facing with or that you're seeing repeating in your own trading, that's why you then realize that you can get better and that this is a winnable game. Every session has a stop hunt. We talked about 3-hour rotations. We talked about that 12 candle window before the market opens, the hour of the market open, and the hour afterwards. In the large majority of times, we will see a stop hunt in that first or second hour. Now that stop hunt may be into the trend. So we may have a big, strongly trending market. Traders are trying to counter trend it. There's a stop hunt. They're trading this stop hunt into the trend. The market reverses maybe in that second hour and then continues for a measured move where traders were trying to counter trend. Now I keep saying this. 3 things that markets do: they break out, they pull back, they fill more orders, and they continue. Breakout pullback. That's a trending day. They'll hit the stops, they break out, they pull back and reverse, and they'll trade to the other side. That's the false break. And then they break out, they pull back, and they go into a range-bound market, which was sort of similar to what we saw yesterday. So we talk about some simple concepts, even understanding the distance from the high to the low. How many pips is that? Is it 25? Is it 50? Well, obviously, some ranges are going to be measured moves, so it could be a 25 pip range, but it might be a 100 pip day based on the overall structure. We talk about structure. Descending triangles, ascending triangles, head and shoulders, reverse head and shoulders, double bottoms, double tops, bigger geometrical patterns that can give us a bias, but also an understanding when we come to the market each session. If we think we're in a down move, we might get a trap down and a stop hunt high for the real trade back in line with the market. So again, really important to be thinking how the smart money is moving the market. When the market has hit the stops, the market will trade to the other stops. So that can still be a trend trade. So they might break out, stop hunt back against a move, and then continue hitting stops on traders that have shorted the market, and then continuing the move to another level where there's existing orders. Now, I saw a really interesting thing yesterday that made me think about a couple of things that I think people need to clarify. The stop hunt can be against the trend, and that is the trade. So last 2 weeks we've had a perfect 1, 2, 3 in the US session against a very strongly trending market on the pound Aussie. 1, 2, 3, 45 minutes. They went into the trade, into the existing downward trend, after the first hour had dragged traders even a bit further. So they got people chasing the move, then they put a 50 pip stop hunt into them, and then they resumed the trend down for a measured move. So you have a strongly trending market. Again, we talked about the 1, 2, 3. And in your mind, again, that hourly rotation, often that will be 4 bars, 1 hour. It could be a small bar, the first one, and then a 1, 2, 3. It could be a bit of, they drag you down in the wrong direction or drag you up in the first couple candles, then a 1, 2, 3 into the first candle of the market open in that second hour. Little things, but if nothing's happening, if nothing's been hit up top or underneath, and you're in a consolidated market, you wait, because they are going to issue at some point a 1, 2, 3, and you're going to see either a pin show up or a 1, 2, 3 that hits the stops and engulfs and reverses. When they do that, if they issue a shift candle, they can consolidate there underneath of that for another hour. But once they've locked that in and the stops have been hit, and they're not going back, or they haven't gone back towards that shift candle, they're done doing their work, and they will go to the most recent level where an existing profitable trade is sitting. Now, again, the stop hunt can be with the trend as well, and that's often the trap. So we get impulsive. We know it's going to be a big down day, so we chase the market down because it's running away, and then 1 or 2 candles into that first hour, all of a sudden it stops. London opens up and they go 45 to 50 pips maybe against you from top to bottom before resuming the original move down. So little things, wait for the stop hunt. The trend will always have a stop hunt counter trend. They will always get people chasing it. At some point they will give three or 4 bursts, a pin. There'll be something there that washes out lower level shorts or higher level longs. This is something that I want everybody to realize. They do not have to take out the high or the low for it to be a stop hunt. If you're in an existing trade and your profit target is at the high or at the low heading into the market open, they may not want to let profitable traders out of the market with profits. So they have a whole basket of orders sitting there that are take profit, but they may not have profitable traders sitting in the original trade in the opposite direction. They will often not necessarily hit the high or low because they know they have a lot of traders with take profit orders before they reverse the market. But they have stopped out the break-even traders who have moved their open trade position to a break-even order from where the original trade started. So hopefully that makes sense. If I'm in a winning trade and I have a profit target sitting at the high or the low, I'm up 30, 40 pips, and an hour into the market, they've reversed it, but they haven't taken out the high or low. Now I'm only up 15 to 20. And I think many people can relate to understanding that. You're up, you have a profit target, and it doesn't get there, and all of a sudden the market's reversed because they've jammed people either higher up chasing a move without taking out the high or the low as they've reversed and flipped the book into that second and third hour, trapping traders, in the wrong direction or without taking any money off the table, and then reversing it to either stop them out with a loss or a break even. We're going to look at some specific examples again, but it's so critical to wait for the stop hunt. Now, if you're in the market and you're in line with you're already in a trade, in a trend trade, if you're in a box if you're trading from one side to the other and you're trending, there's no problem if you're already in an existing move, but you need to be aware that the market, when it approaches the high or the low, if it doesn't burst through to continue that trend, you may be in a vulnerable position for either the move ending and reversing, or a stop hunt back to counter trend your existing opening trade. So hopefully people understand that. We're going to look at some specific examples today. It's going to be, I think, a fairly big day today or tomorrow, because we've had a couple of days of consolidating markets after some big moves. And if these markets do break out and move their levels, there's some big gaps on the daily charts and on the 4 hours where these could make some moves. So hopefully everybody's showing improvement. Wait for the stop hunt. It's going to happen in this 12 candle window. When stops get hit, the market moves. So stay disciplined, traders. Stay focused. Keep getting better. Hopefully everybody's improving, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. Continuing our discussion on waiting for the stop hunt. So one of the questions that commonly has come up in the last few weeks is session timings and about trying to stop or trade against, the market breaks out and traders are automatically looking to try and counter trend that initial burst if it goes outside of the Asian range, or if it is in a trend heading into the next session, they're looking for the counter trend trade. And today I just want to again emphasize from our earlier first half discussion that every session has a stop hunt. You should wait for the market to reveal its hand. And so just, we can scroll through the pound. Doesn't matter. Pick any pair you want. Go and look through it yourself. We talk about the timings. 8 to 11 p.m., 2 to 5 a.m., and 8 to 11 a.m. New York Eastern Standard Time. We talk about the three things that markets do. They break out, they pull back, and they trend. They break out, they pull back, and they reverse. Or they break out and they pull back and they remain in a trading range. We talk about the 12 candle window to maximize our opportunities to position ourselves if the market does indeed lock traders in on one side or have traders trapped and is going to shift the market for 25, 50, maybe 100 pips. But it's critical to understand and identify some of the simple setups that you resonate with best, where you identify your edge and when you trade them at your best, and how you identify those trade setups when they may be evolving, so that you can then start to break that down and identify the aspects of each trade setup that would tune you into picking that trade setup up, how you would go about positioning yourself in the market for the best fill, whether that be at numbers, at market, with a one bar stop or a tight risk reward stop near the high or near the low, and then how you would manage that trade throughout its fruition. So if you have a 50 pip target and the trade goes 40 pips and takes out a high or a low, understanding that that may be where that trade finishes, and then recognizing how that market, if it consolidates, you could be at the end of the move, or if it bursts through a level, it could then proceed on to the measured expansion or your profit target. So again, just identifying, just looking at each day, we talk about the high and the low of each session, and understanding that as we head into the next session, we talk about the low of the previous day. Market breaks out, pulls back, takes out the most recent high of the day in the Asian session, pushes higher, pulls back. Every session has a stop hunt, breakout, pullback, consolidation. The market heads towards the end of the Asian window, pins the highs, stops out traders, consolidates before bursting 1, 2, 3 out. Okay, traders may be already in the market from the low of the swing low, but the market, this break through the high itself is a stop hunt. Understand that. That is a stop hunt. 1, 2, 3. Inside bar, London open. A pullback into the range that hits stops of traders that are in the move long. Market goes into consolidation, and we are out of our 12 candle window. The market breaks higher, and this is a stop hunt. 1, 2, 3 to the high. 1, 2, 3 to the high. Inside bar, 1, 2, 3 to the low. Start recognizing these patterns. 1, 2, 3 to the high, stop hunt. Consolidation. Pulls back. Again, the importance of timing. Some traders are trying to short this after the stop hunt. The market then comes back, and I said this earlier, if you short a high or a low, be aware that you are now inside and there are stops above or below those swing highs and lows that are now potentially stop hunt candidates. The market consolidates and goes 1, 2, 3. Hitting stops. We talked about identifying where the last levels of profitable trades are and where stops may be sitting for the market to come back and get later. And knowing that if you get 3 levels up over the course of a day or 3 levels down over the course of a day, and you're heading into the New York session and they stop hunt high, that the trade may be down. 1, 2, 3 to the high, pin, sideways. They've hit the stops. They consolidate at numbers. The market pulls away from the numbers and engulfs 4 candles. 75 pip move down through the lows of the day. 25, 25, 25. That's 3 levels of rise. Hitting stops at each level before consolidating after the 1, 2, 3 pin high into the US session and the reversal back down. You will see this pattern. In fact, we saw it yesterday on the pound Canadian. Same setup. 1, 2, 3 to the high, stop hunt, consolidation, 75 pip move down. The next session. Again, be aware that every time we break a daily high or low, we could be in a breakout pullback situation. This is a big box. The market breaks out of that box and we redraw our highs. We have a rectangle there. The market breaks out, pulls back, extends the range into the London Open. 1 burst, 2 bursts, pulls back, trades higher. Takes out the swing highs from the Asian session and consolidates on top of that outside of the 12 candle window. And some people have said, well, you know, there's not 50 pips here. Okay, but there may have been another setup on a different pair, or the trade may be later in the session, or it may just be a low volatility day. But again, count the boxes. 25, 25, 25. That's 3 levels of drop. If it's 50, then look for 150. But these are 25 pip increments the market's moving in. We come down to the New York session. Stop hunt. Pull back. We now have an area to fight for price for the best fill, targeting back towards the high of the day. The market moves off the lows. Traders may have traded this right on the break after the stop hunt. The market moves up, takes out the high of London. They may or may not have got 50 pips, but we do now have a market into the next day that can potentially come back and get you. So take your money off the table. Don't hold on waiting for more. If the market's gone sideways at the high after you've taken it out and you're in the trade, take the money and go to bed or get ready for the next session. We go into the next session, there's a stop hunt high. Market pulls back inside, goes sideways, takes out the stops of the Asian session of traders who have gone long. Stop hunts back up in the Europe-London Open with a 1, 2, 3 pin to the high. Goes into consolidation before outside of our 12 candle window breaking out. So now we have a breakout market that's broken out of our London rectangle after dropping off the high of the day into consolidation, taking out the previous day's low. So that's a stop hunt. And then we get the 1, 2 pins to the high, 3 inside bar, dropping down and consolidating into the New York Open for the continuation. Not all these trade setups that I'm showing you are part of your ideal setup, but I'm demonstrating that there is a stop hunt every single session. Every session we redraw our highs and our lows. we draw our market. We draw the day high and low and the previous day's high and low. The market broke through the previous session. Obviously, there was a gap, an extension of a range. We have the most recent swing high and the most recent swing low. The market breaks out, pulls back. Stop hunts the highs of the Asian session with a 1-2 sideways 3 pin to the high. Stop hunt back, inside bar for the continuation back up. And again, mark off areas where there are profitable trades sitting, where people would have stops, because that's where the market is going to head to. The market is going after the money. So the market in Europe breaks higher, stop hunts high and pulls back. After a breakout from the Asian session long, a peak formation low. It consolidates, pin hammer. At the end of the 12 candle window, breaks out again, pulls back, pin hammer. Extends the range into the US session. 1-2 pulls back, pin hammer. 1-2-3 to the high. Stop hunting traders who were short from the previous Friday. 1-2-3 back. Inside bar continues the move with a 1-2-3 up before pulling back and consolidating into the close. Again, the stop hunt in this case was an extension of the range. A continuation. The stop hunt was with the trend back, taking stops out from previous sessions. You're inside. You're inside of a previous box. You're inside. The stop hunt can continue with the trend. Okay, so trend trades, breakout pullback continuation. Breakout pullback, false break reversal, breakout pullback, trading range. Go through your charts, mark these off, wait for the stop hunt at the timings, and then look to position yourself in the market with a 1-bar stop with an asymmetrical risk reward. Hopefully that makes sense, traders. Print your charts off. This is your homework. Start marking up where the stop hunts are, where the profitable trades are, breakout pullbacks, breakout pullback reversals, breakout pullback trading range. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.